we are hearing a lot about hard landing and soft landing. Please explain to the viewers about the meaning of these phrases.
Okay, so there are no exact definitions of hard landing and soft landing. Let me explain that to you with an example from Indian context. Now, the world is interconnected, and if the world witnesses a slowdown, India will also get impacted. So, if the recession outside is severe, here our GDP growth rate would probably decline to 5%, and that would be hard landing for us. Of course, there's the base case, the GDP growth rate should be north of 6%. And in a scenario of soft landing, the GDP growth rate can climb to a region closer to 7%. So similarly, the inflation also would behave accordingly. And in the global context, if we relate it to the unemployment rate in the US, currently we're at 3.5%. A soft landing would take up that unemployment rate, let's say close to 4.5%, and a hard landing will probably take it closer to 6%. That kind of explains. I hope you have understood the difference between soft landing and hard landing.
You were negative on equities last week, but the markets rallied. Where did you go wrong, and what are the lessons learned?
Yeah. So yes, I didn't expect the Indian equities to rally by 2%. US markets were a lot higher. See, the few things happened. One is that the resignation of the Prime Minister of United Kingdom, and that had positive rub-off on risky assets. Second is this is the corporate earnings season, and the results have been better than expected. It only proves that during these inflationary times, companies still have pricing power. But the Chinese markets did badly for a couple of reasons. One is that the 20th China Congress meet that did not throw up anything really positive. And secondly, that the risk of ADR listing is still there. So the lessons learned is that so outside of India the markets were really oversold. So it is only expected that markets rebound from those kinds of levels. And secondly, equities are slave to earnings, and if earnings surprise positively, then markets stocks will go higher. But yes, right or wrong, I do not know. When you think that markets are overpriced, markets can still rally by 2 to 5%, and that's perfectly normal.
India has been the best performing large market in the world year to date. How do you explain India's outperformance?
See, there's this theory that's gaining ground, although in hindsight, is that there are few countries like India which did not exercise the liquidity of put option during pandemic. So we had a very stable both fiscal and monetary policy during the COVID time, and that is kind of helping us now. The countries which pumped in a lot of liquidity during those times are witnessing a higher inflation than us. Yes, India has been the biggest performer, and really what matters is earnings, as told before. For calendar year 22, we are talking about an earnings growth of below 16%. But for 23 and 24, amongst the large top 10, 11 countries of the world, India will have the highest earnings growth, and that helps at the big time.
Your take on performance of bond across major markets?
See, we discussed it previously that different countries will have different kind of performance in bonds. There will be divergence, and that's exactly what we saw. And as the Prime Minister of UK resigned, the bonds rallied there because all those fears of excessive fiscal deficit and all that are lower today. On the contrary, given higher inflation, etc., the bond yields in the US went up. India has been particularly flat, but for 7 weeks running, the Indian bond yields have been inching higher. Now, what I think interesting that we are seeing is that both in India and in the US, the yield curve is somewhat getting steeper, and that's the positive part of it. The gap between the 2-year and the 10-year is coming down. In fact, now the 30-year is in the US has climbed higher than 10-year. So that's interesting. Now we need to see. I don't know. The Moody's has now cut the economic outlook for UK to negative, and what implications will it have for the bond market going forward? And the rates have gone up to in US significantly. For 10-year, it's at the highest level seen since 2007.
The minutes of last MPC meeting were made public last week. What are the key takeaways?
Yes, it's a divided house now. There was no consensus in the rate hike, and what we are seeing is that the external members are more concerned about growth, whereas the members from RBI are more concerned about inflation. So this, some members who don't want front loading of rate hikes, given that the impact the rate hikes play out over a period of time. So I think what is now crucial is to see how the CPI number for October pans out, because given a favorable base effect, that rate is supposed to go down well below 7%. So I think that is something that we need to see. So it's a divided house, and therefore the chances of rate hikes are that much lower.
Rupee has depreciated by 2% during October. What implications does that have for India?
See, that's not a good thing, and we lost about 2%, in fact touched 83 and above, although it's been very volatile. What it means is a higher current account deficit, and what it means is that we'll have a negative balance of payment. But all of us know, and it's well discussed, that India's rupee is far better behaved than some of the major currencies, be it yen, euro, or the pound. And yes, our forex reserves have declined from a high of $642 billion to $528 billion, but that's still a good 8-month plus of import cover. And given RBI's intervention and all that, the forward 1-year premium has come down to 2.5%. So these are some of the positives. But what we expect is that the central bank will not sit quiet. They will take some proactive measures like encouraging NRI deposits, or maybe putting some kind of restrictions on LRS, which is liberalized remittance scheme. And probably will intervene less in the forex market, and let the rupee find its value. And it's quite possible that the rupee might go down to the level of 85 or so, but time will tell.
A last question for you. Crude has been consolidating at higher levels. What is your outlook?
See, we did expect crude to go much lower, but it's been there at 90 plus levels, and that's happened because of few reasons. One is that OPEC Plus has reduced its output for the coming 2 months by nearly 2 million barrels, although the real cut would be lower. And we also still seeing a lot of geopolitics playing out. There will be a price cap on Russian imports. There will be no little purchases from Russia and things like that. Now we also need to be very mindful of the weather. That said, what we are witnessing in the natural gas market is interesting. The prices have crashed, and there is now enough gas available for Europe. And even in the US, for 7 consecutive weeks, the price of natural gas has fallen, and it's down 45% from the peak. So that's a positive thing from energy point of view. What can disturb this? Maybe a very early and severe onset of winter, can take prices higher. But as of now, at least, the problem pertaining to natural gas has been sorted. We will see how the problem related to crude oil and petroleum products, how that plays out in the next couple of months.
Thank you. This has been very insightful.